as I said, we are doing taxes for all the for all kind of experts and living in Spain, and then in around 10 years ago when I started, one thing that we included or we started to do it that we're not doing it before was doing the Spanish taxes, because we realized that it was a complicated a complication more than anything to do taxes by with two different tax preparers, and then we decided that it was a plus to do it both, and especially understanding the implications of the taxes from one place and the taxes in the other in the other place. Since you are living in Spain, as you probably know, you have to you are obliged to do the Spanish taxes, because if you are fiscal residents, then you have to do the taxes, file taxes here in Spain. And then, as US citizens, you also have to file taxes in the US. And there is a treaty between both countries in which regulates where you have to pay the taxes. In general, I mean, almost almost 100%, but I mean, it's 90% of the income that you received had to be paid in Spain, according to the treaty. And that's something that people kind of think that then you have to do you have to pay taxes 2 times. No, you pay them in Spain, and then you credit all those taxes paid in Spain. You credit them in the US. Somebody, I mean, one of the first questions that they asked me in writing that I give it to me was about that. It was about where to do the taxes first and where to do them afterwards. Then technically, theoretically, you can do it whenever you want. But I mean, if you want to do the US taxes and credit in the Spanish taxes, you need to do the Spanish taxes first, so you know how much you have paid in Spain to credit it in your US tax return. The only thing is that it's true. My experience says that some people, they might not need to do the Spanish taxes because they don't owe anything to the IRS, and then I mean then they can do that directly. But that is a minority. I mean, it's
Yeah.
a lot of people. Hold on a second. And so the vast majority, I mean, they have to do the Spanish taxes first, and then do the US taxes afterwards. How do you do that? Basically, asking for an extension in order to be sure that you have time from the Spanish taxes. The period of filing the taxes is from April 3rd this year to June 30th always, and then the US taxes, you can ask for an extension all the way to October 15th. One point that I would like to point out now is that for all of you, I mean, if you're expats, if you live abroad, the deadline is not April 15th, it's June 15th, okay? Because then the question that they asked me is, we have been doing it in the US first since the deadline is earlier, April 15th. No, it's June 15th. So anyway, it is still almost earlier, and then that was we recommend to ask for the extension. Okay, when I was asked to do this presentation, I prepared something on US taxes, and then basically the basic rules of the US taxes and so on. But I realized with the questions that you sent me on writing that they're all about the Spanish taxes. And I understand, because there are the complicated things that, I mean, just to connect both things. Most of the questions, or some of the questions, are about the 720, which is something that, as you probably know, you have to file these 3 months. I mean, from January 1st to March 30th, and then I can go and answer the questions, or I can explain it first. And I prefer to give a general explanation first, and then we can go to answer the specific questions on the 720. You know, in Spain we have 3 fiscal obligations. All residents in Spain, it doesn't matter the nationality, 3 fiscal obligations. One of them is the income tax return, which is the one that goes from the April 3rd to June 30th. which is the corresponding to the 1040 in the US. We have the 720 with is a report. It's only a report. You only have to say when you have your assets abroad, assets outside Spain, which we will say that is the corresponding to the FBAR, the Foreign Bank Account Report, what you have to do as an Americans, reporting the bank accounts that you have outside the United States. Okay, and then the third obligation that you have in Spain, which you don't have in the US, is the wealth tax. The wealth tax is a tax that even if it's what is run by the autonomy, so depending on the community where you live, you might have to do it or you might not have to do it, or you might have to pay or you might not have to pay. So we'll go to the wealth tax later because there are several questions about that. The 720, which is what I was starting to explain, now is they have added a new form, which is the 721. Yeah, which is, I mean, it's like, well, I mean, then I prefer to put them all together, even if I know that it's a different form. Okay, so the 720, the 721 are 4 different blocks of obligations that you have to report. You have to report them, and they are independent. The first block is for bank accounts. I mean, money that you can cash anytime. The second block is for investments, all kind of investments, and pension plans and all those things. And then we will talk about the pension plans later, the US pension plans. The third block is real estate. Then when you have to put your real estate you have abroad. And then somebody asks, what is the difference between the 720 and the 721? Is that the 721 is something added this year, and then it's only for cryptocurrencies. Okay, so it's basically the same form, but I mean, it's not the same form. It's another form, but it asks you for the cryptocurrencies in another country. The third 3 obligations, they are all included in the same form, in the 720, and the cryptocurrencies, they have a form apart from it. Another question they asked me. Okay, here the question is a mix of everything. So the idea is that you have to report any of the blocks if the value of that block is at the 31st of December is over 50,000 euros. So if the block, if you have more than 50,000 euros in bank accounts, then you have to report all your bank accounts. If you have a real estate that the value at the 31st of December is more than 50,000 euros, then you have to report it. The same with investment. Then the reasons to repeat, because you do it once and then you don't need to do it again. You don't need to do it again unless the value of your assets since the last time that you report the 720, okay, had increased in 20,000 euros. And I'm talking about the different blocks. So you have more than 20,000 euros in your bank accounts, or you have more than 20,000 euros in your investments, or the value of the house has increased on 20,000 euros. On the same with the cryptocurrencies, or if you have a cancellation of any of those. So it means that if you sell the house or if you cancel one bank account that you had, then you have to redo the 720. So the whole idea is that the Spanish tax agency will have a control of what you have and up to date every year. Then here's another question about the 714, which is the wealth tax. I will leave it for later. Then here's a good question that I want to answer now, which is, are the 401ks at the IRS considered for the...
Es súper chulo, yo me lo estuve fijando, lo amplié y dije, pero qué cosa más molona. Y digo yo me acuerdo cuando trabajabas 1.000 millones de horas, digo, no te daba la vida para hacer esas cosas, digo, lo habrá hecho ella. Y por eso lo pensé, dije, lo habrá hecho ella.
Thank you.
Okay.
Is this in Spanish now? Can I make a left here?
The 720, the 401ks and the IRAs are pension plans, as you very well know. And And then technically, theoretically, the pension plans are out of the FATCA agreement, and which that means that they are out of the 720. You don't have to report it. But the problem
see.
I'll give you a call a little while, or when I get back where I get in, so that we have time to talk.
Okay, the problem is that Spain doesn't recognize the 401ks and the IRAs as pension plans. One of the conditions for or the only condition for a pension plan in Spain is that you cannot take the money out until you're retired. And the problem with the IRAs and the 401ks is that in some cases you might be able to take it even you have a penalty from the IRS. And then that's why they don't really recognize that as a pension plans. And then my suggestion always to everybody is to include them in the 720 because it doesn't affect you at all. I mean, it's doesn't. You don't have to pay. It's just a report. You tell them, and then they should be happy with it. So my suggestion is to include it. Then do not include it in the 714. Because
that's bad advice.
Because it is, as I said, is not in FATCA, which it should be enough for not reporting in the 714. Let's see what else do you have here. For filing 720, do you use the real estate asset value shown on the K1? No. The value that you have to put in the real estate in the 720 is either the value, the purchase value, or the value, the fair market value. So whatever is better for you, of course. Which I assume that normally would be the purchase value. Here another question. Is there any tax data sharing between the US and the Spanish governments? Yes. Not only that, since 2017, they claim that they have an automatic exchange of information. That's why when you go to a bank now, I mean, if they see that you are a US citizen, then automatically the bank, any bank in Spain, they ask you to sign a W-9 or a document which says this is a substitution of a W-9. You probably know that you cannot sign the W-8BN because that is for the non-resident aliens. So it's for people that are not US citizens. So if you're a US citizen, you must do the W-9. In the W-9, it has your name, your address, which obviously would be Spain, because if not, the bank will not open your bank account. I'm talking about Spanish banks. And then your social security number, which is the tax identification number. And then that form, technically, they cannot share with anybody because that is illegal in Spain, but they can share with the tax agency. And then the tax agency automatically exchange that data with the IRS, and then they communicate. And I have seen cases in which the communication is more than just pure exchange of information. It's just letters specifically, auditing one person, and then the IRS sending a complete tax return of that person, or what that person should have reported in Spain, because they both know that in Spain you have to report worldwide income, which is the same as that you have to report in the US, worldwide income. The mainly difference between the two tax returns is that the deductions and the credits that they have in both countries, which are not the same. In Spain, as you probably know, if you have been here for some years, there are very little things that we can deduct I would say none, but anyway, there are probably things that you can deduct or you can credit. In the US, you know it, you have a lot of credits and a lot of deductions in which you can include. Anyway, since you have to pay the taxes here in Spain first, your taxes are basically controlled, but they are based on what you have to pay in Spain. And then, since you can, with the foreign tax credit, you can offset all the taxes paid in Spain, your US tax return should be zero, and then you only have to get the credits of the or refunds that you might have in the US. So if you have withholdings because you work in the US or you have a W-2 or whatever withholding that you might have, you will recuperate it the following year in your tax return. Because with the taxes that you paid in Spain will be much more than enough to pay those taxes. Not only that, usually we pay more taxes in Spain than we paid in the US. And there is a carry forward that you can do on carry over of the taxes paid that you have no use in the US, and then you can carry over them over the following 10 years, just in case that you need them for whatever reason. I mean, as long as you work in a foreign country, you can use them. If you move to Singapore, in which the taxes are less than the taxes paid in the US, you can use the taxes paid previously in Spain, okay, in the previous 10 years. Okay, what is the... So I guarantee you that there is an exchange of information, and then it goes to very, very detail if they want it. Okay, the wealth tax. The wealth tax is a tax that we have in Spain. Not all the comunidades, all the communities, they have that wealth tax. In Madrid, for example, is 0, so you don't have to pay anything. And most of the communities, they are run by the Partido Popular. They tend to take that out, and that happened with Andalusia, and I don't know which one, but I mean, I can tell you that Galicia, Asturias, Valencia, Catalonia. Well, I mean, I have to go one by one, but anyway, in all those you have to report the wealth tax if you own assets for more than. Also depends on the community, but it's around 2 million euros that you have to report it, and then you have to pay, and then in some cases you have to pay. You have to pay in some cases depending on the comunidad, and they all have different rules. Some of them you deduct the first 700 euros, and in some others is the 400 euros. So you need to go to a regular, because they don't know all the Spanish gestores. They know how that works in that community, and then the only things you have to add. Worldwide assets, so you have to add to whatever the assets that you have in Spain, you have to add the assets that you have in the US. So I don't know if these are the questions that I have on writing that you have sent. I prefer if you ask me questions rather than me doing a regular presentation on all the US taxes, or if you prefer, I can do a presentation of all the assets. I have here in the chat 25.
And if people would like to put questions to Antonio, please let us know in the chat. If you could put, instead of using a hand up icon, please just say, I have a question in the chat, and that way we can start a queue of folks who have questions. I appreciate your cooperating on this. This just makes it a good opportunity for everyone. Elaine has a question, and Howard Rosen has a question. Terry and Joan, they have questions.
I'm going through the chat, just reading the if I have any questions. Just really, we apologize for catch up before starting. Having said, miss the explanation of 720 is where is an interview where we miss explaining the 720. The 720, as I said before, is the report of assets abroad. All the assets that you have outside Spain. They are divided in 4 different blocks, independent blocks. One of them is for the bank accounts. The second block is for the investments and pension plans and insurance and everything that you cannot cash immediately. And the third block is for real estate. And the fourth block, which is the 721, is not the 720, is for the cryptocurrencies, which is new for this year. the due date is March, and they are not associated with any payments. I mean, as somebody suggested. My question probably later. I'm still living in the US, but I'm planning to live in Spain starting in 25. Okay, then when do you have to report the 720? Once that you become fiscal resident of Spain. So you have to file the 720 the following year in which you live in Spain more than 183 days, which is the law in Spain to be fiscal resident. So if you're coming next year, and 2025, then in January of 2026 is when you have to report all your assets that you have at December 31st of 2025, you have abroad. Okay? So you don't have to do it until now. Wow, one thing that it comes to my mind, thinking about some the people that might come, some people that might apply for the to the Beckham law, the digital nomads visa, and then apply to the tax regulations for the nomads and Beckhams. And all those people, even if they are residents of Spain, they are treated as a non-residents, which means that they don't have to report the 720. So if you're a Beckham or you are a digital nomad, then you don't need to do the 720 or the 721. Is answering questions. Larry, please.
Yeah, Antonio, let me help you with your queue. I think I can help you. I think the first one is Elwin Daleus. She has a question, so please go ahead. Excuse me? Elwin, are you there? Yeah.
Yes.
Okay, please.
Yes, I wanted to know if my New York City pension is taxable in Spain.
Yes. The only pensions that are not taxable in Spain are the pensions from civil servants, from the state pensions. I mean, if it's an state pension, yes. Then, I mean, if it's a private pension, yes, you have to pay. But then, if it's an state pension, you don't have to report it. In fact, well,
the disability.
in fact, you have to report it. Okay. You have to report it, but I mean, it's exempt to pay taxes in Spain, but you have to report it to calculate in your Spanish tax return the percentage of taxes that you have to pay. So they consider that for the tax break, but I mean, they don't consider that as taxable.
So if it's so it's if it's a disability pension from New York City Police Department,
then technically you don't have to report that. I mean, it's exempt in Spain. More than I'm sorry to make a mistake again. No, you have to. You end up reporting it, but I mean, you don't have to pay taxes on that.
Okay, thank you.
It will be used in your Spanish tax return to calculate how much taxes you have to pay, the percentage. If that is your only income, then you don't have to pay taxes. And then probably when you do that, when you file the Spanish tax return, automatically the tax agency Hacienda will tell you that you don't need to do the tax return.
Okay, thank you.
You're welcome.
Antonio, several people have, I'm going to interject here, this is Kathy. Several people have said they're considering selling their homes in the United States and moving to Spain and presumably becoming tax residents of Spain. And the question is about the treatment of the gain on the house sales in the US. Can you address that, please?
Absolutely. My recommendation is that you sell it before you become fiscal resident of Spain. Then, as I said, to be fiscal resident of Spain, which means that you will start having all these obligations that we talked before. One of them is your personal income tax return in Spain. Then my suggestion is to sell it before. Why? Because in the US you have an exemption of 250,000 euros on gains that you might have from the selling of your house, which in Spain we don't have that. And then you will be ending paying taxes on these 250 euros or more or less, whatever is the gains that you have from selling the house. because it is reportable and is taxable in Spain. I don't know if that's clear.
Yes, thank you, Antonio. Next question is Howard Rosen. So please, Howard, if you're here, if you want to ask the question to Antonio, please, the floor is yours.
Yes, and I typed it in the chat. It might be easier to read there.
Go ahead, Howard, and let us know what your question is.
No, okay, that's fine. I think I have it here, Howard. Please explain which types of income inside the U.S. retirement accounts are taxable in Spain under the IRPF, which is the Spanish tax return. Then all of them. I mean, the only ones probably that all of them they have distributions, income. It is true that the Roth IRA is money that has already paid taxes, and then what you bring out, you take out of distributions from the Roth IRA, you don't have to declare them in Spain in your IRPF because you have already paid the taxes. So it's like in Spain, it's considered like a regular broker account. The problem is that we don't have those type of instruments in Spain. The Roth IRA probably is worth for you. I mean, the benefits they give you if you are a US citizen, and it is in the benefits in the US tax return. But I mean, in Spain, it's treated as a regular bank account. So it's money that is yours, and then you can take it anytime. So that's another issue. If you plan to come to Spain, then try to move as much money as you can, or you might need, to the Roth IRA because it is not taxable in Spain. And then the rest, I mean, the 401k and the 403b accounts, they are all taxable in Spain. If you get distributions, I mean, or you get money, you get dividends, interest from those, then you have to pay them in pay the taxes in Spain. Yes.
Antonio, with all due respect, your answer does not concur with text in the U.S.-Spain tax treaty.
Okay.
What do you mean?
I mean that in the U.S.-Spain tax treaty, there is a provision that says that the U.S. and Spain agree that all of those types of accounts qualify as pension funds. And as pension funds, the income inside the fund is not taxable, only the payments from the fund as distributions are taxable.
I think this is what I meant, or I'm sorry I didn't explain myself correctly, but this is what I meant. I mean, I said at the end, interest, dividends, and capital gains plus the distributions. So not the fund, not what you have in the fund. But if you have a distribution, what I also add is if you have a distribution from an IRA, you will pay taxes on that distribution. If you have a distribution from a Roth IRA, you don't have to because that money has already paid the taxes, and then you don't have to pay taxes. I don't know. That clarifies what you said.
I will listen to the recording again to verify it.
Okay, but anyway, what you said is correct. I mean, it is correct. So no doubt about it.
Okay, thank you. Next question is Terry Wood, please. If you would like to ask your question. Terry. Okay, if not, we'll move to the next one. Question from Jean Antonio. If I open an investment account, do I have to pay tax in Spain?
If I open an investment account, no. If you open an investment account, I mean, that is not income. I mean, it's you open an investment account. It's money that you have and then you didn't put it in an investment account. So no, I mean, that is not taxable. I mean, it's only taxable the income that you receive. I mean, we are talking about income tax. We are talking about our deposit tax. I mean, it's income tax. So there is no.
Okay, next question. Thank you, Antonio. Is Eric Stevenson, please, if you would like to ask your question.
Okay. Hi, Antonio. Thanks for
sharing this information with us. I would like to know the U.S. tax implications of being an autónomo in Spain. I currently work as por cuenta ajena, and I exclude my income on the 2555, but on the P54 that's published every year, I read about the self-employment tax, and it mentions how to eliminate dual coverage from Spanish taxation, but I'm interested in the reverse because I haven't lived or worked in the U.S. for 20 years.
Okay, and I don't know whether it has anything to do with the implication of self-employment in Spain. Autonomous, I don't see what is the implication of 2555, but anyway, I'm saying this because in general, I don't like the idea of the excluding the 2555, because also blocks you from other things that all benefits that you might have. And so
Okay.
that's what I don't like it. But I mean, anyway, it doesn't matter if you use the foreign earned income exclusion or the foreign tax credit. In whatever the cases, I mean, you offset all the taxes. I mean, in the foreign tax credit, you can even exclude more than what you exclude in the. You can offset more taxes than what you exclude in the foreign in the exclusion. The Social Security in Spain, which is the autonomous, I mean, it is an expense. I mean, it's not considered a tax here in Spain. And as you know, there is a totalization agreement between the US and Spain, which is an agreement between the both social securities, in which basically they said that if you pay autonomous here in Spain, you don't need to pay social self-employment tax in the US and vice versa. So then if you are paying, if you are employed by a third party and then you receive a W-2 and then you are paying Social Security in the US through the W-2, you don't have to pay autonomous here or whatever Social Security here. I don't know if that is what you asked me, or I just went, I mean, I don't know if
Well, I've never actually, I've worked as an autonomous very, very briefly. And since I did the streamlined program and I've been sending my tax returns, I've been a cuenta ajena, but every year I read the publication 52 for U.S. taxpayers living outside the U.S. and it talks about self-employment tax. So I had always wondered if this was something that I would have to declare in some manner.
No. I mean, if you work for cuenta ajena, whatever is in Spain.
Well, I'm thinking of becoming autónomo. That's why I'm interested.
Okay.
Yes, apart from the cuenta ajena.
Then you will be paying autonomo, and then you pay that into the Social Security, and then automatically when you do the report in the US. Normally, all the programs, they automatically, when you declare that you are self-employed, automatically they put you what you are supposed to pay in self-employment tax. But I mean, then you delete that one. You don't benefit from self-employment tax, and then you don't pay the self-employment tax in the US because you are paying autonomous in Spain.
Okay, and there's nothing extra I have to present or declare?
No.
Okay. Well, I'll look into the foreign tax credit. I wasn't aware of that, but I will look into it.
Okay. It is true that it's a little bit more complicated, but I think it's worth it. One thing that happens is that if you use the exclusion, you cannot put money on your IRA account if you have an IRA. I mean, this is one of the big things. And also, there is another issue that some people use is that you cannot claim fiscal residency in the US because usually the IRS denied it because you are benefiting from the fact that you are living abroad with the 2555. And then, so that's, I mean, there are several little tiny things that it might not affect you, but it might affect other people. Then that's why, in general, we don't like to use the exclusion. We use the foreign tax credit.
Okay, I'll look into it anyway. Thank you.
No, well.
Okay, next question is, I'm an American. I have been living in Spain for my entire adult life and have never filed any tax forms with the IRS since I moved to Spain in 1998. I am guessing that the 720, something I'm supposed to submit yearly. What would I need to include in a 720, and what are the consequences for not filing it?
Okay, what you're talking about are two different things. You have fiscal obligations as an American, you have fiscal obligations in the US, and in Spain, you have fiscal obligations from living in Spain, from being resident in Spain. Then the 720 is an Spanish obligation. As I said before, both tax agencies, they exchange data and they communicate. So probably by now, the IRS knows that you live in Spain and that you don't report, you don't do your US reporting. I mean, neither the 1040 nor the ETFAR. Both have big penalties. So hopefully they don't call you and they don't write you a letter. The suggestion to solve that problem is just you can apply to the foreign offshore streamline procedure, in which basically they tell you that if you file that procedure, they forget about everything that happens before, because basically that is they don't call it an amnesty, but I mean, we call it an amnesty because it's like saying we forgive you from everything that you haven't done before, and then we don't review or audit any tax year that is not in the streamline procedure. The streamline procedure forces you to file 3 years of the last 3 years of taxes in the US and 6 years of foreign bank account report, in which you have to report the balance of the bank accounts. As you probably know, the FinCEN, the foreign bank account report, does not depend on the IRS, depends on the FinCEN and the Financial Crimes Enforcement Network, which is another entity from the Treasury. And they have different penalties and different things, but anyway, you must do that, and then you should do the streamline, because it is very easily that they can, I mean, the IRS finds out that you are in Spain and that you are supposed to file the taxes in the US, which doesn't mean that you have to pay, because as I said before, I mean, the taxes probably are going to be 0, and then you only have to report it, do the reporting.
Okay. Okay, thank you, Antonio. The next question is actually 3 questions in one. The first one is are we taxed in the USA if we buy a house in Spain? The second one, is there a tax deduction from a home owned in Spain? The third one, what if we sell a house in Spain and move back to the US? Are the capital gains or the house sale taxed in the US?
Okay, well then, in both countries, in Spain and in the US, you have to report worldwide income. So capital gains of a house, it doesn't matter where the house is. I mean, the capital gains that you have from a house, if it's in Spain, you have to report in both tax returns, in Spain and in the US. Okay, that I think this is the last question. The first question was, or the first part of the question was, can you repeat it, please? Carlos, I think that, well.
So sorry, Antonio. Yes, that was muted. Yeah, the first one was, are we taxed in the US if we buy a house in Spain?
No,
and the second one,
hold on a second. That's very simple. No, to buy is not an income. So you can buy houses anywhere you want, that you don't have to pay taxes for buying the house. In Spain, which is in Spain, but not in the US, we pay taxes on our second house. So if you have 2 houses, if you have one house and you live in that house, that is not taxable. But if you have a second house, I mean, the second house means one in the beach or one in the mountains or one in Madrid, then you have to pay taxes on, you have to pay 1.9% of the cadastral value of the house in your Spanish tax return. So if you have another house in the US and you live in Spain, then you have to pay taxes on the house that you have in the States, because it's a second house.
Okay, and the last one was, is there a tax deduction from a home owned in Spain?
No, there's no tax deductions anymore. We used to have deductions until 2013, in which you can deduct part of the mortgage and just the things paid in Spain, but now we don't have that deduction. They take it out of the tax return. As I said, in Spain, we don't have fairly any deduction at all. I mean, this you have to pay and calculate everything on your income, and that's it.
Okay, thank you. Next question is, I'm still living in the US, but planning to live in Spain starting 2025. if we sell a house in the US, can we use that money to buy a home in Spain, similar to the way it is allowed in the US?
I mean, then the problem is that if you live in the US and then you sell the house while living in the US, and or at least being fiscal resident of the US, so that means that that natural year you live in the States more than 183 days, then you don't have to pay taxes in Spain, because you have to pay taxes when you become fiscal resident of Spain. The means that is when you live in 183 days. And then you can benefit when you sell the house is when you sell the house in the US, you can benefit from the US deduction, the 250. You don't need a deduction. If you buy a new house, you don't have to pay taxes on the buying.
Okay. The next one, Antonio, is so I have no assets in the US. Do I have to fill a 720? And or I don't have any tax obligations?
No, okay. If you don't have assets neither in the US nor in any other foreign country, I mean, from the Spanish perspective, if you have an asset in Andorra, I mean, even if it's close and they are almost part of Spain, it doesn't matter. It's a foreign country, so you have to declare the 720. I assume that when that person says that he doesn't have an asset in the US means that he doesn't have any assets abroad, outside of Spain. In that case, he doesn't have to file the 720. I mean, like probably most of the Spaniards living in Spain as residents of Spain, they don't have to do the 720. The problem with the challenge of the 720 is for the foreigners, because normally the foreigners are the ones that don't have assets outside Spain. I mean, abroad.
Okay, thank you. I think the next question you already answered it, but let me just say it again. Is my New York City pension taxable in Spain?
I mean, if
taxable in Spain, yeah.
If it's an state pension, no. I mean, they're exempt. State pensions are exempt as long as they are Americans. I mean, if you're American and you have double nationality and you're Spanish, then you have to pay taxes, even if it's a state pension. But if it's a private pension from New York, from whatever, I mean, it's I don't know when they said it's a pension from New York. I don't know if they refer that is from the state of New York or from living in New York, or from I mean, referring to a pension that they got from working in New York. As I said, if it's a public pension, then it's exempt in Spain. And but if it's a private pension, then you have to pay taxes.
Okay, thank you. Next one is, please explain which types of income inside US retirement accounts are taxable in Spain under the IRPF, the Impuesto de la Renta de Personas Físicas. Please consider IRA, Roth, IRA, simple IRA, 410, 413 accounts. Please include income from interest, dividends, capital gains, and capital gain distributions.
I think that we answered that question before, but yes, all the pensions except the Roth IRA, interest, dividends, and gains, capital gains that you get from those IRA accounts and distributions, they are all taxable in Spain. Not the fund that you have in the account, but the distributions that you receive from those, except in the case of the Roth IRA, in which the distributions are not taxable in Spain. Because, as I said, it is not recognized as, I mean, because you have paid taxes already. I mean, there is money that you have already deposited in one account that has paid taxes, and then you don't have to pay taxes again.
Okay. Next one is, I'm going to sell my house in the US. I live in Valencia. What are the implications for capital gains tax I will owe to Spain?
Well, then when you sell the house, apart from paying when the plusvalia that you pay to the town in Valencia, wherever you live, then in your tax return that you have to file the following year, then you have to declare the gains that you have from that, and then you pay taxes on that gains.
Okay. And this is more clarification question. It says, I have read the Spanish-U.S. tax treaty, which was amended in 2013. It states that both Spain and U.S. have agreed that IRAs and 401k are indeed pensions. Therefore, they wouldn't have to be reported on the Model 720. Why do you say they should be reported?
I insist, because I think this is a gray area. Because I have seen when we called in Spain a binding question from the tax agency, in which it is not very clear, and they don't want to clearly say, because the IRAs, the 401ks, in some cases may not, but in some cases, there is funds that you put in a financial institution, which you can take out anytime you want. And then that is not a pension plan for Spain. In Spain, pensions are the money that you put in the pension plans, not the product that they sell you in the bank, but a pension that is considered by the tax agency a real pension, are those that you deposit the money. You cannot take the money until you retire. And I think that they have two exclusions, that it says one if you die and the other if you need the money because you are in a situation that you need the money and so on. But basically that is what the Spanish tax law defines as a pension plan, a pension fund. And as I said, this is something you all know, that you can, in most of the cases, you can take the money from the IRA or from the 401k, and even if you pay a penalty, the 10% to the IRS, but you can take the money out. And then that's why, as I said, it's a gray area. I'm sorry. Then my suggestion is to put it in the 720, so you avoid problems. Just in case that Hacienda audits you and then decided to ask you why you are not putting that money, which then you have to argue that it's a pension plan, and then we'll see if the Hacienda accepts that. I don't know if you have experience with the Spanish tax agency, but there is like a monster that rolls over everything, and then they decided whatever is the thing, and you have to argue against what they have decided. But it can take you who knows how long. 10 years to take a final decision on that. So, and in any case, you have to pay first to argue with Hacienda.
Okay, thank you, Antonio. And the next question, I think, is a follow-up question. It said, if I sell house with loss, what happens? I think it's in Spain, right? Doesn't say so, but
then you don't have to pay taxes. Nothing happens. If you sell the house with a loss, then you don't have to pay taxes on that.
Okay. Next one, I'm wondering about money transfer from US to Spain, which I believe is taxed for amounts over, say, 10,000. Are there any tax breaks for using that money, say between 10 and 50,000, to buy a house in Spain?
No, as far as I know, to bring money from the US is not taxable. If you bring money, you do a transfer from your account in the US to an account under your name in Spain, it's not taxable. The only thing is that a bank has to, depending on the amount, has to tell the Banco de España, the Bank of Spain, and then the report is saying this person is bringing money. But if you bring money, I don't think the Bank of Spain is going to tell you anything. They will probably be happy that you bring all the money that you have. Because it's an asset for Spain, and for sure you don't have to pay taxes on that, not at all. I heard about the 10,000 euros issue, and I think you are not supposed, by Spanish law, you are not supposed to bring in cash in your pocket more than 10,000 euros. You cannot carry that 10,000 euros in your pocket. You have to do it through a bank. So it is controlled by the Bank of Spain, and then, but it's not taxable at all. It has nothing to do with taxes.
Okay, thank you. Next one, I am beginning to look into being a freelancer, autónoma, here in Spain, but I have not yet made any declaration in the United States. I just finished my studies, so I haven't done taxes in the US yet. I'm from Puerto Rico. How does one get started? If it is relevant, my type of residence in Spain is pareja de hecho, and I recently began working with an agency in Puerto Rico.
No, I mean, if you're a resident of Spain, then what you have to do is do the Spanish tax return. And then if you're autónomo, then declare the actividades económicas and the tax return. In the Spanish tax return, it has three different areas to put your income. One is when you work for a third party. The second is what we call actividades económicas, which is the self-employment tax, in which you put your income and all the expenses, and then you declare them. And the third place is a tiny cell in which you report all the income that you receive from other sources which are not well, they're not fiscal recognized. So I mean, it's complicated. I mean, it's, for example, when you have income from parking place that the Comunidad de Vecinos owns, then since the Comunidad de Vecinos cannot do the tax return, then they force you to distribute that income among the owners of the house or the comunidad, and then you have to put that in that cell. That is something that happens to all those that you have an LLC, which an LLC, I mean, if it's a sole proprietorship, it is not recognized as an entity and it doesn't pay taxes, and you have to pay the taxes in your own tax return in the US. You have to put that amount, the revenue, you have to put the revenue in that cell.
Okay, next one. I have been in Spain for 1 year and I'm preparing to pay taxes for 2023. I have a US state pension and social security income. I also have an investment account, Roth IRA and traditional IRA. My understanding is that I will need to pay only on the growth and value of the investment accounts. Is that correct?
I think so. I think that is correct. If I understand correctly, you only have to you only pay taxes on the income that you receive. So not on the amount of money that you have in the bank, but in the interest, dividends, capital gains that you might get that year. I don't know if that answered the question, because I think it's I missed something, I think.
Yes. You want me to rephrase it?
Okay, let's see if please.
Yeah, it's only that, yeah, she's been living in Spain for 1 year and preparing to pay taxes 2023. He has a US state pension and social security income. They have an investment account as well. And their understanding is that they only would have to pay taxes on the growth and value of the investment account. That's
not on the growth value of the investment account. I mean, I don't know how the investment account is, because I mean, they have to pay taxes on the pension and the social security benefits. I think that she said the other income that she has, and also on the interest, dividends, and capital gains that they might have from the investment account. Capital gains, what you receive from the US in a 1099-B, those are the capital gains, and then you have to pay taxes on that. It may be a growth or it might be a loss. I mean, I don't know.
This is Kathy. I'm going to let everybody know that we have time for one more question, and then we're going to have to close the meeting. Unfortunately, we are past our time, and Antonio has been very kind. We realize that there have been some technical difficulties, and we'll be distributing the link to the entire program to our participants, so watch your email for that. Let's give Antonio one more question, and then we're going to call it a day. Again, thank you for everybody's participation, and a special thank you to Antonio for his sharing his wisdom today. We're very grateful.
Okay, thank you very much. So then, please, last question.
Okay, let me follow up. I'm a dual citizen, and I do my taxes in the US. In Spain, I have a bank account that I report in the FBAR. Spain assesses tax on my dividends, and every year I go to the web of the Agencia Tributaria and confirm my borrador, draft. Is all of this correct, or do I have anything else? Thank you.
Well, Yeah, I think it's correct. I mean, what you have to do is get the borrador. I mean, because as you know, we all in Spain do the taxes through the tax agency. You log into the tax agency and you download the borrador, which is all the tax information, all the income that you received that is known by the tax agency. Then you receive that and it tells you how much you have to pay. But of course, you have to include there all the income that you have from the US. If you live in Spain, because I don't know if you said at the beginning that you don't live in Spain. If you are fiscal resident of Spain, you have to put in the borrador, in the login that you have with the tax agency, you need to report all the income that you have in the US. I mean, if you work, that is, I mean, dividends, interest, capital gains, I mean, rents, even if they're in the US, everything. And then you include that, and then the result is whatever the tax agency tells you. Okay.
Well, but this has been such a help, and thank you so much. I know that we could just keep on going all afternoon or all evening with questions. Antonio, thank you again, and we are grateful to everybody who participated today. As I said, there will be an opportunity to review the recording, and I hope you find that useful as well as the program today. With that, I'm going to close the meeting, and I hope that everybody has a great rest of the evening.